And Ivan, what's your take on inflation numbers this week? What should we be looking for, and how could it potentially impact currency pairs?
Okay. So, more than anything else, you need to have an opinion on, or at least have an opinion on what is the dollar going to do, in terms of rising or falling, depending on what you expect the number to be. So right now we have an expected inflation of, what is it going to be, at around 5, 6, 7, 8, 9, 10. That's around 8.1 expected, and core about 6, so a bit less than expected, or a bit less than last time, sorry. But if this one goes 0.1 or higher above, you're going to see dollar bullishness pretty strongly, pricing in another rate hike in June. So yeah, sorry.
Yeah, no, I was just gonna say, and that's the thing. It feels like increasingly, like the inflation reports feel increasingly more and more pressure, and it makes sense because we're talking about inflation numbers that are really scary, and everybody's wondering, are we going to go into double digit inflation levels? And what could that do to stocks? What could it do to the dollar? And it's a lot of there's a lot of pressure, and I feel like CPI numbers in the past have been they cause the market to move a little bit. But my speculation is that inflation numbers are going to cause increasingly, as we near those numbers of double digit inflation, everyone's going to focus on this number super hard, and definitely could have some serious implications on the dollar pairs, the stock markets, and just global markets in general. So Ivan, we have, for people who can't see those numbers, can you read them one more time for what is our forecast number, and what was the previous number?
The previous one was 6 point, well, if we can just Google, there we go. 6 is what the Fed is most looking at. The core, there's X food, X energy, that's expected to be 6%, and inflation is supposed to be 8.1, previously 8.5. So it's 0.4 less than last time, but it's still 8%, still 6% core. It's still way above the 2% target.
Right. Now, and if that number comes out, Ivan, with the 8.1%, if it comes out as expected, then that would, to a degree, be what the Fed is looking for. They're at least trying to slow and even curb inflation there. What could that do to the dollar if it comes out at 8.1% on the dot? What would you say is likely to happen to markets?
I believe it's going to be a sign of relief, probably a bit of a dollar bearishness, like just a spike down on dollar and then back to price again before what it was before, because what we already priced in is already in the price. So if we get what we want, there's not going to be a lot of move, but it's going to be a little move, and enough move. If you are very price sensitive, is going to take your stop loss.
Right. Now, what about, let's say we had 7.9 or 8? What would that do to USD and to S&P 500, things like that?
So if you're thinking of general
Right.
inflation and it goes down to 7, dollar bearish is going to fall probably between 50 to 100 pips in split second or split milliseconds. You're not going to be able to react on it because it is computer based.
Yes.
But it's going to be more than 1 second. It's going to be more than 1 minute. It's going to be lasting for more than 1 minute. That move is going to continue lower. There's going to be probably a pullback on within the next 1 to 2 to 3 to 5 minutes after they move. But generally, that's going to make that rest of at least this week bearish on dollar at least. So really, really important that if it's going to be that much, that's a lot.
Yeah, and to another point, for those of you guys who are stock market investors or you watch the US indices, if we see anything underneath the forecasted inflation numbers, that could potentially be the relief that the stock market is looking for. The stock market, if you trade things like SPX 500, US 30, NAS 100, has been absolutely destroyed. If you look at it, it's so ugly. It's been sold off so hard. And the stock market is looking for some sort of hope, but it's just not getting it. The Fed, saying that they're not going to do 75 basis points helped out for a little bit, but then it failed again and fell back through the floor. So today we see the S&P down like crazy. The thing is, for those of you guys trading indices or watching indices, if you get something underneath the expected inflation report, that potentially could turn the markets bullish. It could really send that market high. And there may be some excellent opportunities along the way. So that's actually something I'm looking at, even big time, is the indices. And I don't like to short the indices, but if we get less than inflation, my attention will turn focused on the S&P big time.
So, what is your longer term bottom here? Where do you think the market's going to go?
Yeah. So, well, I'll tell you this. If you're asking me in terms of a trading perspective, it's going to be different than investing. I did actually buy some more stocks today, this morning, in terms of a longer term positioning, but short term, there's not a lot of, if you're looking at price action, there's not a lot to go off of in terms of bullishness just yet. We need a catalyst. We need something to punch the market in its face to go back up. It needs something like a lower than expected inflation, or the Fed to ease off, or something that we're just not getting, and that's why the market is so timid. So I don't really think that I know, where the bottom is, where I'd be interested in looking at. Perhaps a longer term pullback to previous COVID levels, previous high. Maybe that's in the books if things don't improve with inflation, but that would be longer term.
That day is when Fed said, well, we're going to lower interest rates because of COVID.
Mm-hmm.
Here is where they said, well, we're going to start buying bonds. And there's going to be one meeting in between there, 15th as well.
Yep.
This is where the Fed starts to make the market do what they want to do. But it took a month from the first one to actually, when it actually started turning around. So even though, if we see now maybe the Fed saying, well, we don't want more than 50 basis points, and the market is pricing in 75, and other things like the market is pricing into too much interest rates, we are going to see a higher, but it might not be at the first turn. Like the initial move might not be right now. So when we're coming into like June now, or coming into even August, the general move is that we're going to have less CPI. We're going to have less, that's at least the projection is supposed to peak.
Right.
Now, if we see now this week we are not peaking, well, then we continue waiting. But if we see it peaking, you might never know that we might be going back up again. But
yep,
I agree with you. I don't know where the bottom is, but I'm keenly waiting.
Yeah, and I love that you made that point, because that's kind of my indicator as well. Last week we had NFP. That was big. But it's the inflation. The inflation is so front and center for this market right now. It's what the Fed is solely focused on. They've been incredibly hawkish because that's what they focus on. So that carries over to the market. The market is so fearful around inflation. And of course, you might not catch the absolute bottom. If you wait for good news on inflation, you absolutely will not catch the bottom, because as soon as that news hits, that market's flying. But the carryover could be a nice continuation back up. That's the most optimistic of situations. But waiting for that curve, like you said, is probably a good early warning sign that there could be some relief coming to the markets.
One day, one opportunity. We will see on Wednesday.
That's correct. And we'll see if it, and to your point also, and I don't mean to sound doom and gloomy, but if that number comes out as higher expected, if we have not seen a slowdown despite the Fed's efforts recently, we are probably in for some more pain on the S&P and on the dollar continuing its massive roar to the upside. So it's all coming down to Wednesday, I think.
And earnings, generally earnings, where more and more companies say, well, we're not making profits.
If you're an aspiring technical day trader or swing trader when it comes to forex, we've got something cool, completely free for you. We're going to be handing out our technical analysis handbook, which comes with tons of strategies, techniques, entries, exits for you to check out and to try in your trading on a demo account, see if they work for you. All you have to do is use the link down below in the description, send the word handbook to our team on Telegram, and we'll send you a free copy. Again, all you got to do, swipe up, send the word handbook to our team, and we'll send you a copy of our technical analysis handbook, completely free.